right, it was a wild ride on Wall Street last week. We finished on a high note. Dwayne Thomas from Stifel Nicholas joins us. Good morning, Dwayne Thomas.
Good morning, McGraw.
So what happened on Friday? Had a little bounce back. What happened?
It was nice to see it, and it's not unusual to have that type of bounce back after Wednesday, Thursday was a 1,300-point drop. Friday, we moved up 287 points, finishing the day at 25,400 for the Dow. So nice bounce back. It was good to see. It definitely felt a lot better in my position, no doubt about that. And we'll see where it goes.
All right. Now, think about today and think about a story that Amazon would declare bankruptcy or maybe even a Walmart, right? Unthinkable today. But that's what it was like, or that's what it is like to say that Sears is officially filing for bankruptcy. That's amazing.
It's been a long, slow, painful death for a lot of years for them. It's been, none of us can say this is a big surprise at this point, but you're right. If you go back 50 years, they were the Amazons or the Walmarts of the world back at that point.
It was the first everything store. You went to Sears for everything.
Exactly. And, it's interesting. Everybody wants to say it's because of Walmart and it's because of Amazon. And there's no doubt those companies have sped up the process. But a lot of it really goes back to management decision over the last 30 to 40 years. If you remember, Sears used to own Allstate, still today a very profitable company. They started the whole Discover card, today an extremely profitable company. And those are things they spun off and got rid of. And they were two of the cash cows for them. I remember I started the business in 1985, and I remember in the late 80s having a portfolio manager do a talk about what retail to own. And he said, well, I want to own Walmart. I'm not going to own Sears. So, 10 of us in the room said, why? And he said, well, for every dollar of goods sold by Sears, it costs Sears 43 cents. For every dollar of goods sold by Walmart, it costs 33 cents. You just can't have that competitive disadvantage. You've got to bring your cost in line to be competitive.
Yeah.
And they failed to do that.
Yeah, it's a great point. But it's also a great point that, yes, you can blame Walmart and Amazon, but you still have giant big box stores where you can walk in and buy everything, a Target and whatever else. So it's technology has certainly changed Sears, but it's not all technology's fault. It's a great point.
And you mentioned Target. I mean, they remade themselves from the old Dayton Hudson. They were the Sears type of store way back.
Yeah. No, it's interesting. But Sears officially declares for bankruptcy. We'll see where that goes. Earnings this week, Dwayne Thomas?
Yeah, we have a lot of companies reported earnings, and it's going to be interesting and fun to see. So think in terms of, Bank of America today. On Friday, we had J.P. Morgan, Wells Fargo, Citi, and PNC Financial. 4 big banks all reported very positive earnings. Market was up on Friday. Today's Bank of America. Tomorrow, Netflix, Morgan Stanley, Goldman Sachs, IBM, BlackRock, J&J, Abbott Labs, American Express. I mean, the list goes on this week. It's probably the busiest week of the quarter for earnings reports. And earnings are expected to be up about 20% year over year. That's a positive sign.
And then finally, a lot of talk of this Washington Post journalist that is now missing in Turkey. A lot of people looking at Saudi Arabia. This hits the financial world because why?
Well, Saudi Arabia hosts a very large, they call it the Future Investment Conference. And it's later this week. And it's just, big money goes there because they've got so much money to invest globally.
Right.
But we've having some major people pull out. Jamie Dimon announced yesterday he's pulling out, and J.P. Morgan's pulling out. Bill Ford of Ford Motor Company is pulling out. The head of IBM, the World Bank, Alan Sorkin, probably one of the most influential writers right now in the financial world, is pulling out. CNBC's pulling out. They don't want to go there. They don't want to support it. So what's taking place in a one-off situation is impacting the big money in Saudi Arabia in this type of conference. It'll be interesting to see how that plays out.
Yeah, don't kid yourself. That's big news on the world stage when a Jamie Dimon at J.P. Morgan says, sorry, we're not going to this thing in Saudi Arabia. That's a big deal.
Exactly. And the ramifications, unfortunately, could be some type of kickback with oil and oil prices.
Which is why being oil independent isn't always such a bad thing, but that's a whole other issue. All right. Markets today, Dwayne Thomas, after an uptick on Friday.
Start actually a little bit benign. We're going to be down about 50 points on the opening. Of course, they're going to keep watching earnings and how some of these stories play out this week.
Dwayne Thomas, have yourself a good day. Thanks for getting up early.
Sounds good. Talk to you.